Hi guys, it's Cryptobirb here. It's Adrian speaking on this beautiful Friday evening in Poland. I hope everybody is doing okay. And today I'm hosting a very special premium webinar for everybody to get you some sort of like couple of updates about Bitcoins, where we are going about, the local timeframes, the medium timeframes, and the longer term timeframes. And on top of that, I'm going to reveal and unveil the biggest myth that, in my opinion, just goes around the technical analysis and pretty much like just what everybody gets wrong about the supports and resistances. If you're in for the free ride, make sure you actually stay tuned and let's go. Okay, hope everybody's doing okay once again. Let me know very quickly if you can hear me, if you can just see me. Okay, today's kind of like a different environment. I'm not really in my office, but let me know, just ping me, let me know in the comments where you're actually writing from. Some people are just already saying, now they are from Norwegia, right? I'm a big fan of Scandinavian countries. It's one of my biggest wishes is actually to go there, and actually do some sailing, professional sailing license, if you will, okay, to enable, all the sailing throughout the oceans and everything, okay. So this is definitely beautiful spot, beautiful place. Poland, UK, Florida. I mean, by the way, Florida is probably one of the most desired place in mind to go to. Indonesia, Chicago, Aruba, amazing Aruba. Greek living in Dubai. I'll be in Dubai in about 2-3 weeks from now. Actually, sorry, less than 2 weeks. Norway, okay, France. Very good. Bonjour. Denver, USA, Croatia, South Africa, Crete, okay, pretty good. Nigeria, Slovakia, Canary Islands. That is pretty good, everybody. So I think this is beyond obvious that Bitcoin has been going through some sort of like a local tiny bit of correction. Okay, so to what level, to what extent we can just anticipate $58,000, my previously mentioned region, to be visited in any time soon. We're going to pretty much like just understand what is going on locally for Bitcoin. And everybody who is new to this very just channel on our YouTube, especially if you're watching that on YouTube and you've just arrived, make sure you hit that subscribe button, hit the likes, leave some kind comments for with questions, because later on the show, this is going to be kind of like a shorter show today, about 45 minutes. Last 5 minutes I'm going to commit and dedicate to the five questions of the Q&A. So make sure you actually leave some questions in the chats, in the comments, and I'll make sure to actually go through them, okay? And everybody, I want to just give it a go and start off from Bitcoin's technical analysis, then later move on to what everybody gets wrong about the supports and resistances. One of the inspirations was for me the big misunderstanding that I noticed on public Discord on our end, on Twitter. Many fake gurus, many fake technical traders who are not really so good traders. They would confuse you pretty much like about what the supports, resistances are and what these are not. Again, I'm here to actually break it down and to the pieces and unveil the truth about these myths. Okay, so if we go to straightforward, go and unveil the charts with the local analysis, what we can tell to start with, hope everybody is seeing the screen well, is we have a couple of very simple volume weighted average prices anchored. AVWAPs, okay, anchored volume weighted average prices, which are pretty much like available in here, okay, on the scroll down, pretty much just on the roll down list. Just roll it down, here on the left. Okay, the anchored VWAP is actually what you want to have. Okay, you can just decide about the anchor point. So we have two main view-ups, two main volume-weighted average prices. So these are the fair prices according to Bitcoin's price levels combined with volume. Okay, so what it refers to is that we have an anchored view up coming from the all-time highs, and we have the anchored view up coming from the very final leg up anchor. Okay, the very final anchor that started at 29.2. Okay, so we have this combination in conjunction, the crossover of these two averages. Okay, where the more recent, the faster average actually crossed over, the slower average, the average that accounts more data ever since the all-time highs. So we have seen recently this bullish crossover. So it tells you that this short-term or medium-term leg up that has been pushing through, for the past days, it has literally crossed over, per the momentum. It's shown enough strength to overcome the main volume-based resistance, which was approximately $42,000. So what it tells you is that this effect of this entire sell of these 80 days of sideways, okay, has been already annihilated, has been neutralized, and we have flipped bullish. Okay, so we have flipped bullish after an 80-day long plus sideways, okay, which was following a result of a previous sell-off. So we have neutralized the Birbs, okay? And to put it simply, it shows you, like, as the bullish crossover, okay, as the bullish cross, it shows you the overall tendency of the market that medium to short to medium term timeframes are stronger in the upwards direction rather than the longer time frame, which was defined by this volume weighted average price anchored at the all-time highs. Okay, so the information in here that you get out of this crossover is a very significant one, and in my opinion, this may be something that eventually decides about the new all-time high is coming. Okay, so what you need to know, again, locally, if we actually just zoom in a bit, okay, is that we have been seeing this very kind of like, just dashed trend line going on, okay, and this dashed trend line anchored at the very extreme low at the very final leg up, okay, has seen some sort of a breakdown in here. This breakdown is an early symptom, is an early warning, okay? And what I mean by early warning, and by early warning, I mean, before we go back to the chart, I mean that this is something that is of not so big reliability, okay, but something that can evolve into something more serious, okay? And what I mean by that evolving into something more serious, it has the opportunity, it has the chance to evolve into something of bigger significance, okay? So this initial local breakdown bears the risk of us, just pulling back or throwing back, should I say, the price of Bitcoin into the $42,000 region, which is provided by these averages, okay? So from my previous webinars, one of the webinars was fully dedicated to the mean reversion, to the overall statistical nature of the time series data and how the prices oscillate around its average, creating the averages, hence as a result, there is a phenomenon, okay, where the averages, I should say the prices oscillate around the averages. So whatever goes outside the average in the upwards direction towards some extreme, it's bound to recover. It's bound to, I should say, not recover, but throw back. It's bound to retrace, okay, perhaps with some local overthrows, bear traps, if you will, okay, to later go into another extreme, and so on and so forth. But still, what defines the average trend, okay, is this very mean, is this very average. So having these averages, just like any other average, but here it's volume based, okay, this tells you about the short term, I should say medium term direction, and for this one, and long term direction for this one. And you can tell that the bulls, the buyers, are advancing for the strength over the bears. Okay, so again, this local breakdown, just having this, this trends, this moving averages can be used as trend lines, if you will, as well. The lines that show you the trend, the very diagonal trend lines, have already seen that this very diagonal trend line has already seen its breakdown. Okay, so what it tells you is the local information, the feedback is that it bears the risk as an early symptom, early hence not confirmed, that we will revisit the mean reversion areas approximately around $42,000. That is what bears the risk, of us, just staying below the breakdown level. Below the breakdown level, you can tell that there was some, there was some peak price action going on. There was some trend line breakdown. Okay, we have seen local breakdown and local pullback to retest the breakdown. So locally, if you narrow down into lower time frames, you are actually in the local breakdown retest. Okay. So as long as we fail, as long as we keep losing this breakdown level, keep rejecting the local timeframes, intraday price action around the resistance, this intensifies the risk, of Bitcoin revisiting $42,000 regions, which is not going to be unhealthy at all. This is actually going to be quite a healthy step, mainly because we would see the first factual, breakout retest, if you will. Okay, so we can tell that there was some, pretty much like range highs area in here. Okay, or I'm not going to repeat myself too much. If you want to, just can go back and scroll through all the videos that I did about it, because it took me 2-3 months to actually analyze it properly. But it would make a lot of sense to see some sort of this, rounded retest. Okay, and if you see this rounded retest, and if you do not see it, even it's pretty much like irrelevant, because the technical target of this range measured, from 28.6 low of this one, okay, for the mid-June, to the very highs of $42,000, $43,000. This gives you the range of $13,000 to $14,000 kind of like base size, the average base size of the range. And based on the measured movement, you actually take the base size of this pattern and put it, actually place it on top of the breakout level. Okay, so measured from the $42,000 level, from the breakout area, added with $13,000 per se, it gets you somewhere the target, the expected target to be somewhere approximately, $53,000, $55,000. Okay, that is the technical target of the being the result of a breakout of this 3-month long range. Okay, 2 or 3 month long range. So knowing that this is the target, if you get this in here, okay, and you have the very healthy retracement, very healthy throwback towards the mean reversion, the market resets itself, reloads on the buying side, and at the same time, it gets more bullish potential towards the upside shot into the 55,000s. Okay, so if you get this local, throwback towards like $42,000, which would make quite a lot of sense if you think about it. Okay, you would see a lot of these, the higher on the price scale we go, you would see a lot of these 10-20%, declines, this retracements in a downwards direction, which will be typical and healthy. Okay, the short-term retracements are usually about a 15% retracement on average. The medium time frame retracements go with 30 to 40% retracements, and this very kind of like thing that we have seen in here, on the past, in the very recent history of Bitcoin, on the macro scale, was some form of overextended medium time frame correction, which instead of taking extreme average of 40% decline, it took 60% or 55%, if you will. Okay, one way or another, the averages, the technical patterns, everything suggests that we are bound to revisit the mid-50s, the mid-50,000s. Okay, and I want to make sure everybody, this is clear. Okay, please let me know if there is something unclear, and I want you guys to be following what I'm sharing with you. I want you guys to be following again with some follow-up questions if you have any. Okay, so please make sure to actually come up with the questions a beautiful words, for praise Jesus. I love that. Make sure you put the questions, okay, in the chats, in the comments, whether you're on Twitter or on YouTube. And if it's on YouTube, then it's better, because I could easily go back, okay, to the questions after the show and kind of like bring the answers. But locally, what matters, okay, is that we are bound to revisit the mid 50s. Either way, doesn't matter if we go the healthier path of retracing back towards like $42,000, or we go, and have this sort of like a deviation in here, okay, the local deviation, where it would be a fake breakdown, a bear trap, if you will, okay. And if you see a close through, then close through the broken resistance, the broken support that now turns into resistance. If you see a daily or weekly close through over, 48,500, let's say $49,000, then, what from the statistical nature of chart patterns is that the failed chart patterns tend to perform better than the regular chart patterns. Okay, so if you have, just for an example, a rising wedge, right, some form of a rising wedge, which you could read in the technical analysis books, that it's usually bound to break down or retest with the retracement of the size of the base size. Okay, this is the base size of the pattern, and you could anticipate that the retracement size, the target would be somewhere equal to the base size, as you can tell in here. Okay, so what do you see? This is the regular pattern, but what do you see in the failed patterns, okay, is that you can tell that, okay, there is some sort of like a breakdown, but this breakdown just pulls back very quickly and actually recovers all the losses, okay, and breaks back inside the rising wedge. So this rising wedge is not a rising wedge anymore, and the failed patterns start to perform so much better, statistically speaking, than the regular ones. Okay, so same applies to the let's say inverse head and shoulders. If you see a downwards trend, and if you see potential reversal pattern of head and shoulders inverse, right, then you could anticipate that there's some bullish implications afterwards, and you see a breakout. But if this breakout, the market is not fully ready to reverse just yet in the upwards direction, you may see a fake out, and this fake out tells you that if it happens, it bears the chances so that the failed pattern would perform so much better than the regular pattern. The regular pattern would be of the base size that is equal to the distance between the neckline and the head. Okay, here, if the fake out occurs, you could anticipate way bigger profit out of this. Okay, so the failed patterns tend to perform better than the regular ones. So if we go to the lower time frames even, okay, this is the very same concept of the volume-weighted average prices, anchored the most significant price extrema, right, which is the maximum price or minimum price to the high and low extremes. One taken from the 44,000s, okay, taken from the local highs of 5,500s, okay. And what it gives you is that gives you the conjunction, okay, the conjunction of two average prices measured from the peak and from the local bottom, okay. It gives you the conjuncted area of approximately 48.1K. This is a conjuncted area acting as a strong resistance, okay. And before I continue, move on to what everybody gets wrong about the supports and resistances that will help you pretty much like save you so much money, improve your overall technical accuracy of your predictions, of your projections, of your trading profitability, okay? I want to just give you the very final tip on Bitcoin, what's going to happen in my opinion. So what do you know? So what you know is that the average price, the fair price, accounting the local extremes in here and in here, is approximately 48.1. Okay, this is what it tells you. The very local extreme tells you instead, okay, that the average price of accounting the very last local leg up per se before the local, the most recent pull back, it tells you that the average price is 47.3. Okay, so if we account the very latest, okay, the very latest anchored volume weighted average price, it gives you another conjunction of supports. So this serves as some sort of like a reactive area, okay? Now that the price action is trading locally over that, you could expect this to be more of a support than resistance, but at the same time, you can tell there is some local candle, okay, which is a form of a shooting star candle, if you will. Then you have some sort of like a, bearish doji, high wave doji, or hanging man type of a doji candle, which technically speaking is not the most beautiful bullish candlestick formation, right? This bears some sort of risks accounted with the local analysis of the supports and resistances, which I'm going to reveal more deeply in a couple of minutes. This gives you also the conjunction of resistances, the confirmation and the confluence of resistances in one place. So I would not be so certain, so sure about the strength of bulls locally in here, mainly because we are kind of like wobbly. The overall Bitcoin's market on the intraday basis on the hourly chart, is locally wobbly. After this somewhat decent, pullback candle in the upwards, you saw this super choppy, extremely choppy, not even pattern looking bottomish thing. Okay, this chop solidation, if you will. Okay, so we have two price reaction areas. One is 48.1 and the other is 47.3 on average. Okay, so you could anticipate, in my opinion, for the Bitcoin to continue ranging inside this area, okay, for the rest of the day, right? Unless some form of unexpected event, like some FUD news comes in, or some super bullish news comes in, which would break out of this range. And by definition, when you have a range of the range bound, the extreme low and extreme high defined by some swings, you could anticipate, certain targets in the breakout direction. So if you see a breakout direction on being the upwards, then you could measure the base size, being the size, the distance in a price scale between the extreme low and extreme high, and put it, just like I did with the medium time frame range, to anticipate, a 55,000s. You could anticipate, the other upside target in case of an upside breakout, which holds in here. Okay, if you see a downside breakout of this range, right, then you could know that this downside breakout is going to be measured, and used as an anchor, as a psychological anchor in the downwards direction, in this occurrence of the breakouts in the downwards, okay, side. So again, knowing that we are moving in some sort of strange looking, range, the very extremes are defined by this and this week. These are the local extremes. So technically speaking, anything that moves between these extremes in this form of a rectangle is not bullish, not bearish, is just neutral. Okay, so if you see a bullish breakout out of this rectangle, that you would get the base size equal to $3,000. Okay, to $3,000 measured from 46.2 to 49.23. Okay, so $3,000, and $3,000 measured from 50 for approximately 50,000 for 49,500 is giving you somewhere about $53,000 region to expect. Okay, if you see $3,000 breakout from the 46,000 low, this places you somewhere between $42,000 and $43,000, and the local throwback towards the mean reversion. Okay, so we can tell there is a lot of conjunction, a lot of confluence, a lot of confirmation from many different techniques, being the chart patterns, being the overall measured rule of the chart patterns, the candlestick formations, the trend lines, the volume weighted average trend lines. Okay, all of that makes sense. And if we go towards the very high time frame, predictions, then my high time frame predictions stay still. Okay, they do stay still, and I still expect, since the moment I actually brought the chart in, it was somewhere between $40,000. I said that I expect the Bitcoin price action to occur in some form of a consolidating, contracting, consolidation, the coil or chart pattern, symmetrical triangle, some form of a concentric, conjuncting trendline based pattern. Okay, where the volatility decreases over the time, and which would be followed by the final breakout for the fifth wave of Elliott. Okay, of applying the Elliott wave principles, we're still missing the fifth wave of this bull market. The first one starting in the very floor of the bear market 2018 and the start of the bull market December 2018. The first wave, second wave overextended in the bottom towards the bottom direction. Outside with the abnormal volatility caused by the COVID, by the black swan, which no technical trader would be able to predict per se, about the technical analysis or fundamental analysis, it does not tell you the truth. It's not a crystal ball per se, right? It does have its own predictive powers because of the self-fulfilling prophecies and the way that people use that as the reference point. Okay, and when mixed, combined with the fundamental trends defined by the macroeconomic indicators, just like or the interest rate per se, this is what defines the long-term directions. And the TA, the adjective technical for the analysis, it does refer to the fact that this strictly comes from the market inside. Okay, the macroeconomic factors, the macroeconomic forces, the interest rates. Okay, and the cost of capital per se, it is external, right? It doesn't belong to the technical analysis. It is external. It happens outside of the market. What happens inside of the market directly stems and comes from the market mechanisms, market dynamics. The fact that the market, like the way that the markets operate and work. This is what we call the technical, specific, technical. This is what you can define with this. Okay, so knowing the long time frame directions and the fact that we are heading the first, the second, the third, which is usually the longest, the fourth wave, which eventually was already finished, or at least found the bottom, in my opinion. You could anticipate the rest of the quarter three to be in some form of a lazy price action. And it would make additionally a lot of sense because based on the seasonality effect, Bitcoin has been performing over the past years on average worse in September rather than, let's say, November's. So it would make a lot of sense to see a worse period of, corrective period after a massive upside pullback, massive upside recovery of Bitcoin, which I was expecting all the way from the bottom, okay, which I was called an idiot for. It would make a lot of sense to expect, more wobbly and more bearish price action in September, okay, to follow the regular patterns, the regular seasonality effect, where the late phase of quarter four is something that literally blows your mind, something that literally establishes the final euphoria on the market, the final peak, if you will. Okay, so knowing of that again, in my opinion, having the coil structure, the coil pattern, the symmetrical triangle, until the quarter four kind of gets advanced, towards November, December. This makes a lot of sense to see some further consolidation and the final leg up to see everything bubble. Like last week, I was referring to how I'm expecting the NFTs bubble to occur. Okay, oh shit, you're right. Wait a second. You're right. I have no idea how the MIG actually just fell off. Crazy. Sorry about that. That's hilarious. Hope everybody can hear me back. Okay. I have no idea how long it took. It seems like 5 minutes or so. Sorry about that. Okay. You can tell I'm so actually excited about what I'm sharing that the mics drop. So back to the merit. Okay. It would make a lot of sense to see slower consolidation with the slightly more bearish September price action, October to get some sort of like a relief, to get you final relief, final strike, final leg up, the fifth wave of the bull market into November, December. Okay, this would make a lot of sense in my opinion. And having these, having these, points, concepts already in mind. Okay, before I answer all the questions later on in the chats, I want to get you what everybody gets wrong about the supports and resistances, what everybody gets wrong about this technical analysis aspect, which is one of the most important one. Okay, so if we were to define supports and resistances, you have to understand that this comes from the economic forces. What drives, before I actually just pull out the charts, what drives the markets in specific directions, in the upwards direction or in the downwards direction, okay, are the economic forces in a way for a consensus between the supply and demand. So the demand, which is the buyers, if they are stronger money-wise, if there's not quantity-wise, but money-wise, if there is more money on the bullish side, on the demand side, okay, there is more people who demand certain asset, Bitcoin, real estate, stock, or whatever, than the suppliers, than those who provide it, then it would happen eventually that certain people would be able to pay more than the average price of the market price just for the sake of having it, of desiring, just coming from the desire, to have and own certain asset. Okay, so imagine if you see a valuable asset, okay? If you see a valuable asset, then you want to own this, okay? And if you want to own this, and there is entire world of people wanting you to own this very same asset, object, NFT, whatever, at the same time, then you would have to participate in some sort of like an auction. Okay, there would be certain bids and asks. There will be certain battle between the given price and the price that you are willing to pay for the sake of having it more urgently. Okay, so the urgency and scarcity equals cost, equals price increase. So whatever becomes more scarce and more urgent to have to be owned, this gets more expensive, right? Hence the deflationary results of the Bitcoin's protocol per se, of the Bitcoin's overall decentralized peer-to-peer cashless network. Okay, Bitcoin is designed in a way to have deflationary model where there is limited supply, and this limited supply brings the scarcity, because the more we adopt the market, the more and more people, okay, the more and more people would want to own this very Bitcoin, and there are only 21 million in the circulation. So this supply shock at one, or not even a supply shock, I mean supply shock if something just, there have been a certain supply shocks where there were some certain big wallets, having not millions but thousands of Bitcoins, and they kind of like got lost, for example, right? Somebody lost an access to them. This is a supply shock. The supply shrinks overall because like you cannot bring those assets back. You cannot bring those Bitcoins back into circulation unless you know the seed phrase. Okay, if you do not own the password, the seed phrase, and your keys, okay, your private keys, then this is lost. This is a supply shock. The supply shrinks. Her demand per asset, per coin, per Bitcoin increases, which makes the overall tendency and trend to go up for Bitcoin, right? On this very basic example, again, I can tell that most of the people get it wrong, that they think that supports and resistances are set in lines, right? Like literally they would go, let's actually clear that chart, out of everything. You could anticipate how everybody can see that. You could tell again, that loads of people think and assume that supports are lines. Okay, that this is a line, period. That support and resistance is not backed by supply and demand fluctuations and consensus, that it is just a line in the chart. Same for the resistance. Okay, so what happens instead? What happens often, okay, is first of all that you can tell where the by definition that the support is the price level or territory where the price action historically has seen more bounces. Okay, so the support level is where the price upswings, and the resistance levels, okay, are where the price action of a certain asset tends to downswing at. Okay, so you can tell this is a support because the price up like has seen an upswing, and this is a resistance. This is a support, right? This is a resistance because the price have seen a downswing in here, right? And kind of like, you know, the resistance got broken, and you saw an upside push through the follow through towards a higher resistance, and there is a thing that is called polarity change principle in the technical analysis. This polarity change principle tells you that whatever you know, it refers to the polarity. That broken support turns into resistance. The broken resistance turns into support. So if you see a price action resisting to go through a certain level in here, just like this one, you know, you can anticipate again that once broken, it's going to work as a support. The broken resistance turns into support. Okay, and once this breaks, let's say, again, okay, then this broken support turns into resistance, which is exactly what happened in here, if you will. Okay, making this part, this fraction of the price action, to be a fake out. Okay, the specialist breakout, if you will. So what everybody just misunderstands about it is they assume that supports and resistances are lines in the chart. That these are some fucking drawings. That these are some literally drawings you can draw on with a pencil on a paper. And this is a support. This is bullshit. This is nonsense. This is the biggest misunderstanding and misconception of the technical analysis as a whole, most likely. The supports and resistances are people. Those are the bids and asks, the positions that people take in order to acquire or sell certain position. Okay, and I want to make it very clear, everybody. Referring back to what I said about the scarcity of an asset, if somebody wants to own the very same asset, okay? If you want to own Bitcoin, like have a look at the chart. If you want to own Bitcoin, okay, and want to own this for the price of 46,500, okay, then I promise you that the chances are, right, that there are going to be more people wanting to acquire the same Bitcoin, your Bitcoin, for the same price. Okay, so everybody wants to get in chipcoin B, like in Bitcoin cheap, right? Cheap coin. Everybody wants to get cheap coins. So what it means again is that certain people, because of the scarcity principle, are going to be able to pay more for the same Bitcoin just for the fact of having it because it's scarce and wanting to have it more urgently. So if you want to have it urgently, if you are pressed emotionally or from any other point and reason, then you are ready and willing to pay higher price to acquire this Bitcoin. So what happens, okay, is that you, let's say, whenever there is a decline and there is enough buyers to stop, you know, to have the consensus that the buyers are stronger than the sellers, okay, you can tell that again, buyers are stronger, okay, than the sellers. Then the market reverses, right? And the market reverses in here. So then you have it as your reference point to define what is cheap, okay? Like if you saw before resistance, you know, this gives you the high extreme to decide what's cheap and expensive. This high told you that the market decided that Bitcoin was expensive at that time. This low, the market told you, okay, that the Bitcoin was locally cheap. So the closer to the cheaper area, the cheaper the Bitcoin gets, right? The closer to the more expensive area, the more expensive the Bitcoin gets. So the price extremes, the supports and resistances, the levels, and the zones, the territories where the price action bounces, has their swings. This serves psychologically as the reference point. You refer to these price extremes in order to tell what's expensive or what's cheap. So because of that, the price extremes, okay, the price extremes, the supports and resistances have some form of a predictive power, because you know that many people at the same time use the very same reference points to make their financial decisions, to decide what's cheap or what's expensive for Bitcoin. Okay, hope you can tell, then you can see that. So if the buyers advance are stronger money-wise than the sellers, then the market swings up. And I promise you that if the market pulls back or throws back towards the very same areas, that people would know that this is cheap, and they would want to have it more urgently. So they would bid higher prices. So what happens is you see people bidding higher and higher prices. So you would see eventually the supports piling up, right? So if you have a look, so what happened in here, okay, is you are seeing the supports piling up. Okay? So here, there was the local support, right? And then people started bidding higher prices, okay? The price did not manage to go back and retest the very perfect level of the lows, okay? Which makes it instead a support zone. And on the other side, you would have very similar, I should say, resistance areas, okay? So you would know that, again, there is certain high. Whenever the market just goes to its extreme, you can tell that there is a resistance, okay? And there was an attempt to go and actually retest the very highs of the resistance, but it failed, okay? Instead, you saw an upswing, the downswing in here and in here. So you can tell that this area, as a matter of fact, served as a resistance area, or if you will, supply cluster, supply layer, okay? It's all synonymic phrases. So the biggest lesson, the biggest myth that everybody literally gets wrong about this is that supports and resistances are literally that lines in the charts, okay? Supports and resistances are the people who bid or ask with their positions, okay? So if there are many people on the demand side who want to acquire a certain asset, aggressively and more urgently, right? Then this is why the market would have the supports piling up one after another, one on top of another. Okay, this creates not support resistances levels, but areas. Okay, whenever you think of supports and resistances, you should be thinking of support resistance areas, zones. And knowing of that, again, you would see a lot of fake outs going on, right? You can tell that, okay, there's you have to have some sort of like a filter, percentage filter, or bands, on top of that applied, that if this works as a resistance, you could easily have a breakout above and fake out eventually to follow. Okay, so failed breakout, this making it a failed breakout. So this failed breakout marks another resistance. Okay, and this entire zone is where the sell-off occurred, was where the distribution occurred, which made the market to swing back towards in the downwards direction. So because of that, the two downswing levels being located one next to another, being in a tight narrow range, kind of like compressed, this is what creates a supply layer, a resistance zone. Okay, and most of the time, because what I said, there are no chances that you would be the only person bidding a certain level on this planet at one point. there would be hundreds and hundreds and thousands of people wanting to acquire the same Bitcoin for the same price as you try, right? So if this is a shop where they sell Bitcoin, you would come to a line for a certain price of Bitcoin, and you would need to stay in queue in the line, consisting of thousands and tens of thousands of people to acquire the Bitcoin. So either you can wait and hope, you would still get a piece of it, or you can bid higher and skip the line. So what people do is they skip the line, right? And it works both ways, and it works in the upwards direction, right? Whenever the upswing occurs, which builds the demand zone, right? Or on the selling side. Okay, if you have enough power to reverse the market when you are a whale, you can decide about the market directions. Okay, and when everybody just gets to buy the broken resistance because of that's what they read in the technical analysis book, that's where the buying liquidity is, where you can dump literally all your billions of dollars of money. Okay, yeah, you need to excuse some quality issues with the connection, perhaps with the mic that just literally had dropped before. It's crazy, but I'm not really in my office, so I hope you still appreciate me sharing the knowledge with you. Okay, so the biggest takeaway I want to leave you with is that supports and resistances are not lines. These are not lines in the chart. Those are the people. Okay, and aside from the horizontal levels, let's say given in here defined by the price extremes, like, or here the price extreme, or another price extreme given in here or in here, right? You can tell that there is a lot of upwards reversals. Okay, so we can tell there is a demand zone building in here. Okay, we can also tell there was a couple of resistances in this local region. Okay, so these resistance levels being clustered one next to another consist and contribute to the local supply area. Okay, so the supply areas and the demand areas is what really matters. Okay, even if you see a deviation below support, and if it manages to reclaim back, okay, then this deviation becomes your kind of like demand zone. You have to know that the price action has deviations, some unpredicted events, and the whale manipulation. Okay, so because of that, again, you have to remember and allow for the deviations to occur, right? Same for the trend lines. Trend lines, the diagonal lines showing in the trend direction, the upwards or the downwards, they do have certain deviations, just like you saw a deviation, let's say, in here, right? You would see a significant breakout in here, which became a form of a deviation, as a matter of fact, right? Deviation of a downtrend. The price action followed through in the upwards, right? Which was followed by a further sell-off. This was a fake out, and the failed patterns tend to perform better than the regular ones, just like I said. So these fake outs eventually, may become traps. Just like here, you could anticipate when the trend direction is strong, when the market is strongly defined in a certain direction. Just like you see this trend ending here, if you see a strong follow through and close, approximately 49 or over, the higher the better, like $50,000 area, this is confirmed as a deviation, and deviations occur. Deviations are something regular. Okay, deviations are something regular on the upwards direction, in the upwards reversals, and on the downwards reversals. Okay, the deviations are something natural. And because of that, if you trade supports, resistances, breaks only, then you would likely get surprised in a negative manner. Okay, because you would see Bitcoin liking to trap, people liking to trap over extremely bearish people, over extremely bullish people. Bitcoin likes to trap people. Okay, locally, in my opinion, we are in the local, again, risky area where you could get this $42,000, just retracement, and one way or another, if you get it or not, if it's confirmed down there at 42s, or if it's occurring to be a fake out, the 55s are coming, and the supports and resistances, everybody, are no lines. These are the people. Okay, And okay, let me get you very quick Q&A part. Okay, before we go, let me see. I appreciate Omar kind words. Glad it works fine, Wilhelms. Okay, Emmy, have to run. We'll catch the rest later. Thanks, Birb. You're welcome. Okay, does the volume profile correlate with supports and resistances? It does. It does. It really does. Okay. Before the mic thing, you said expected about NFT bubble. Yes, indeed. I do expect an NFT bubble. Like whatever happens right now with NFTs is purely irrational. For your information, I have NFTs. I own a lot of, like, maybe not a lot, but I own a couple of NFTs. And I know how the euphoria looks like. I know how the market irrationality looks like. Okay, so I do expect that after this insane rally of 100x's of NFTs on average, you would get 95% decline and crash for most of these, like fucking papers or rock scissors, whatever other bullshit. It's completely useless. Okay, and because it's irrational, it has to fail. Okay, but it would fail temporarily, because later on, when the final leg up on Bitcoin happens in Q4 late stage, okay, November, December, you would see everything bubble. The legendary alt season that I was talking to, coming from the superposition effect, the NFTs bubble, the DeFi bubble, the mainstream bubble, coming with Ethereum somewhere between $10,000 and $20,000 in my opinion, Litecoin pulling $1,000, chaining over $100, and so on and so forth. All of that, in my opinion, is coming, but until the NFTs will have crashed and recovered again. Okay, so so when can we estimate that heavy retracement? End of September. I do believe it's not going to be rather heavy, but more of steady, slow, bleeding retracement that usually you can see in the September. We heard you just worst quality, but good. That's just now better. Sorry about that. I have no idea. I probably just coming from this lots of dash gestures and like, waving hands and everything. I just really, you can tell that I'm really excited about me sharing all the knowledge with you. Okay, so if you appreciate it, do make sure to hit that subscribe button, hit some likes, thumbs up, hit a notification bell so that you stay tuned with the next videos whenever they come up. We have the daily trading uploads every single day. Every single day, new video comes out in order to actually help you out, save you money, let your money stay in your pocket to help you out with trading, boost your trading profitability, and so much more. And everybody, let me check very quick what the name of the program he's using to draw on the screen. This is called a screen brush. It's a MacBook stuff. OS screen brush, go for it. So you do not see previous ATH all-time high as much of a resistance. I do expect it. It's a strong resistance because it's the only level of this area. But it doesn't mean it's not going to get broken, right? Do you have a theory why Bitcoin pumped the last 3 Fridays? No, I don't think there is any theory behind it. Best descriptions of charts I have seen. I hope everyone signs up to the Bird Nest newsletter. By the way, this is a great comment to actually remind you. Thank you for that, Amy. We have a free newsletter. Okay, if you go to our website, thebirbnest.com, we have, aside from insane amount of goldmine, literally all of highest quality infographics for traders, you can find about the altcoin hype cycles, literally pulling, the key information. Hopefully it loads. Okay, because there are some connection issues apparently, but all the chart patterns explained, like about the falling wedges, about the rising wedges, about like how to decide what and how to trade, swing trading, intraday trading, healthy process in handling losses. Every single part of the technical analysis that you can find valuable is already there, and it's free, available for downloads. Make sure you go for it. And aside from the webinars, just like this one, we also have that blog where I literally drop my free market reports, where I commit hours and hours and super big amount of energy of my time to get you all the resources for free. Okay, this is all for free. And newsletter, Amy actually just brought the point of newsletter. So if you put in that email and your first name, we're going to get you free newsletter. And this time is very specific. It's very crucial because we have an ongoing promotion allowing you for combined 40% off discounts for selected premium packages and memberships of the Birb Nest, okay, for the newsletter subscribers. So the subscribers of the newsletter are going to get special discount coupons, and this 20% discount coupons expire today in the next couple of hours, 10 p.m. UTC, which is in the midnight. It's pretty much like 4 hours from now. So you have 4 hours left to sign up for the Birb Nest free newsletter, or the Nest letter, as I love to call that. Just hit your email, hit your first name in here. You're going to get automatically, with your sign up confirmation, you're going to get the special discount coupon, which will help you sign up at the decreased rates for the calls only. These are already lowered prices. And on top of that, you're going to get even better discounts. Okay, so make sure everybody go for it. Go for the Birb Nest newsletter. Okay, I'm going to get you and attach you the link so that you can check it out. And well, hopefully it makes a lot of sense that with this free content that you're going to get on the weekly basis, okay, you are going to get not only the free trading materials, resources to help you boost your profitability, but at the same time, you're going to get a special discounted coupons, limited discounted coupons, which expire in the 4 hours, next 4 hours, guys. If you want to save your time, save your money, and expand of all the knowledge, okay, with all the knowledge that I have just shared with you on this very free premium the webinar, okay, and want to join, and if you are serious about your improvement, want to improve your trading profitability, catch your losses, learn how to recover your losses with my and my team's 24/7 support, then we are waiting for you in there outside, with thousands of people ever since 2017. You're not going to find many people, many trading communities like this one, which exists since 2017. We've been through the bull markets, we've been through the bear markets, ups, downs, FUDs, pumps, FOMOs, peaks, troughs, literally everything that you can come up with. And we've nothing but grown insanely. We're probably the largest community of this kind around right now. If you think you could fit well into this community, if you want it to be your home, if you want to learn from me and from the rest of my team, guys, go set yourself up for the free newsletter on thebirbnest.com under the resources. Go for the newsletter, okay, just like you see in the link displayed. And you're going to get a special discounted coupon, which lasts only for the next 4 hours. Everybody, and after this Friday expires, you're going to get lower discounts. Okay, so make sure you rush over to thebirbnest.com. And I, guys, want to congratulate everybody on being part of this show, of this Friday's webinar of the Birb Nest trading community. It was Adrian speaking. Hope everybody is going to enjoy the rest of your day. God bless you, everybody. Stay safe. Bye-bye.